And one thing that's clear is not only, of course, as we knew, Uber money losing, but it's not actually offering up a profit anytime soon. The Amazon model, if you will. What's your expectation of what you're willing and others will be willing to stomach here?
Well, that's a good question. I mean, we've actually modeled it in a way that we think that Uber will become profitable by 2024. There are certain things that they can certainly take advantage of. They have a huge user base in terms of the riders that's attracting the drivers. So they've created that network effect moat source, as we refer to it. So I think over time, as the number of transactions, whether it's rides or food delivery, increase on that platform, the cost per transaction is going to go down. And also, we think that the acquisition cost of each rider is also going to decline. So we're thinking that all of those are going to lead to wider margin expansion and, again, profitability probably by 2024.
Ali, did you say there that it is the driver base that is the moat? If that's the case, then how do they retain these drivers that are already striking, protesting, and, you know, having, in some cases, to sleep in their cars to make a living wage?
Well, that's a good question. It's tough. Well, first off, I should say that the network effect that I just described is on both sides. So the demand side, which is the riders, and then the supply side, which is the drivers. So the more riders that you have, then the more of an opportunity it represents for the drivers to make some additional money. But in terms of some of the demands that the drivers have, I think it remains to be seen whether either Uber or Lyft are going to settle with the drivers. It also remains to be seen in terms of how the munis and or government at the state level or the federal level are going to approach these issues. But I think, or we think, I should say, that both Uber and Lyft are going to be able to basically find a solution for this. And given that the demand continues to remain high for their services, we think that they will still benefit from either providing a higher take rate or actually stabilizing the pricing on their services. And by the way, one more thing I should say, that we have seen indications of pricing stabilization. I think if you paid attention to Lyft's Q1 earning call, they are seeing signs that prices are actually stabilizing, more rationality behind pricing.
So back to the comparison between those two, though, because on that point, how much can Uber do to raise its pricing, pass on higher driver pay to the customer if it's facing off with Lyft? Do you see them as head-to-head competitors, or are we now seeing that Uber is way out in front?
Well, actually, in the United States specifically, we do see them as head-to-head competitors. However, the way, in our opinion, we should look at it is that it's become a duopoly in the United States. So there is, again, more rationality behind the pricing, where either side does not necessarily see the benefit of discounting the pricing too much or too aggressively cutting prices. So again, and that brings about the stabilization in pricing. So I think both parties are realizing that, you know, if we stabilize prices a little bit, then both companies in this so-called duopoly at this stage will benefit.